Hola, Prime's the name where the profits rise. Fingers on the keys, dreams taking flight. We trade the future, we own the night. Hola, Prime, the rhythm of the trade, where the bold and the fearless are made. From London to New York, the thrill's the same. Step into the beat of the Hola Prime game. Candles dancing on the screen's bright glow. Risk and reward in the ebb and flow. Through the highs and the lows, we play this game, fueled by the fire of the Hola Prime name. Every tick, every move tells a tale. Navigating storms, we will prevail. The charts are canvas, profits are aim. Pain and success with the Hola Prime name. Hola Prime, the rhythm of the trade, where the bold and the fearless are made. From London to New York, the thrill's the same. Step into the beat of the Hola Prime game. Every tick, every move tells a tale. Navigating storms, we will prevail. The charts are canvas, profits are aim. Pain and success with the Hola Prime name. Fortune favors those who dare. In the heartbeat of the market we declare, Hola Prime is more than a name. It's the pulse of the trade, the trader's flame. Hola Prime, the rhythm of the trade, where the bold and the fearless are made. From London to New York, the thrill's the same. Step into the beat of the Hola Prime game. Fortune favors those who dare. In the heartbeat of the market we declare, Hola Prime is more than a name. It's the pulse of the trade, the trader's flame. Trade. Chasing the charts under neon skies. Hola Prime's the name where the profits rise. Fingers on the keys, dreams taking flight. We trade the future, we own the night. Hola Prime, the rhythm of the trade, where the bold and the fearless are made. From London to New York, the thrill's the same. Step into the beat of the Hola Prime game. Candles dancing on the screen's bright glow. Risk and reward in the ebb and flow. Through the highs and the lows, we play this game, fueled by the fire of the Hola Prime name. Every tick, every move tells a tale. Navigating storms, we will prevail. The charts are canvas, profits are aim. Pain and success with the Hola Prime name. Hola Prime, the rhythm of the trade, where the bold and the fearless are made. From London to New York, the thrill's the same. Step into the beat of the Hola Prime game. Every tick, every move tells it.
Welcome back, traders, to Quiet Markets. Let's get you up to speed on everything that moved the markets and what we're watching for today. Good morning to you over in Asia. Still is Wednesday evening here in the States. Let's get you prepared for the trading session ahead. Starting with the energy markets, we did see a bit of a rebound in crude oil during the Asian session. West Texas Intermediate, WTI, recovered to trade near 62.80 a barrel. This bounce was fueled by a much larger than expected drawdown in U.S. crude inventories. The Energy Information Administration reported that stockpiles fell by a staggering 6.014 million barrels last week. So quite a huge swing from the previous week's build, and absolutely demolished market expectations, which were only looking for a draw of about 1.3 million. This significant drop points to stronger underlying demand, giving black gold a solid fundamental reason to push higher. However, capping that upside was a renewed sense of optimism surrounding the Ukraine conflict. President Trump stated that while he ruled out putting U.S. troops on the ground, the country might provide air support as part of a deal to end the war. Any progress toward a peace agreement tends to limit oil's risk premium, as traders anticipate a potential return of Russian crude to global markets without sanctions. So we are seeing a bit of a tug of war here between the strong physical demand data and geopolitical hopes. And we'll need to keep a close eye on any headlines out of Russia for the next directional move. So shifting to currencies, the British pound had a notably rough session. GBP USD pair slid for a third straight day, shedding about 0.3% to fall back into a key technical area around 1.3450. The catalyst was a fresh batch of hot inflation data from the UK, which surprisingly caused market bets for another Bank of England rate cut to slip below 50%. It seems traders are interpreting the data as not being strong enough to force the BOE's hand, creating uncertainty that is weighing on the pound. All eyes are now on the upcoming UK PMI figures today to see if the economic momentum is holding up. Meanwhile, the US dollar had a mixed session. The greenback couldn't hold on to early gains with the dollar index, the Dixie, finishing marginally lower near 98.20. The main event for the US dollar was the release of the latest FOMC meeting minutes. The big takeaway was that almost all Fed participants advocated for maintaining the current policy status quo. The minutes highlighted that officials still see the risk to inflation as outweighing concerns over the labor market. Several noted that the current benchmark interest rate may not be far above neutral, which the market interpreted with a slightly hawkish tilt, suggesting the Fed is in no rush to slash rates aggressively. This helped put a floor under the dollar for most of the day, but the narrative got a lot more complicated thanks to some political drama. President Trump publicly called for Federal Reserve Board Governor Lisa Cook to resign immediately following allegations from a Trump-appointed housing official that she potentially committed mortgage fraud. So this is a significant development because it signals the administration is actively looking to pressure and potentially replace Fed members to install officials who would create more acquiescence to steep early rate cuts. This political pressure is creating uncertainty around the Fed's cherished independence, which ultimately weighed on the dollar as the session wore on. This was clearly seen in the US dollar Japanese yen pair, which logged back-to-back declines as traders grew wary of the political pressure targeting Fed governance. The pair is now caught between key technical moving averages, essentially directionless, as the entire market holds its breath for the main event, which of course is the Fed Chair Jerome Powell's speech at the Jackson Hole Symposium. Again, that's coming up on Friday. So a hawkish tone from Powell could push the dollar Japanese yen above 148, while a dovish tilt could see it break below 147. On the commodity-linked currency front, the Canadian dollar found little room to move. USD CAD pair traded flat, steadying near a 3-month high around the 138.70 level. The loonie is still grappling with the latest inflation data out of Canada, which did show a sharp deceleration in key underlying measures. This caused traders to dramatically raise their bets on a Bank of Canada rate cut as soon as September. with odds jumping to nearly 70%. And this is creating a fundamental headwind for the Canadian dollar, keeping it on the defensive for now. Moving over to equities, the Dow Jones continued to grapple with the 45,000 region. The index faced fresh bearish pressure early on, and that, of course, was largely driven by a sell-off in the tech sector as investors reconsidered some of those sky-high valuations. Names like NVIDIA, Intel, they did see some significant declines. However, the Dow managed to recover most of its losses throughout the session, highlighting that the underlying bid in the market is still present, even if cracks are beginning to show in the previously bulletproof tech trade. So what's on tap for today? Thursday. The economic calendar is absolutely packed. We'll get the preliminary readings of the S&P Global PMI report for both the U.S. and key European economies as well. This is a great real-time pulse check on business activity. For the U.S., the services and the manufacturing PMIs are expected to show a slight decline. We also have the usual weekly jobless claims, the existing home sales, and the Philly Fed manufacturing index as well. But the real story today is the kickoff of the Federal Reserve's annual economic symposium in Jackson Hole, Wyoming. While Chair Powell doesn't speak until Friday, the event begins today and will be on the general market radar. So with several Fed officials scheduled to make appearances at that. Every comment will be scrutinized for clues on the interest rate path. Given the political pressure and the recent data, Powell's task tomorrow is incredibly delicate. He'll need to balance still sticky inflation concerns against growing calls for cuts. And that's all without appearing to bow to political pressure. It is a high wire act that will undoubtedly cause volatility across all assets, from Forex to equities to commodities, you name it. So traders, make sure your risk management is tight because the fireworks are just about to begin. That's all for this update. Good luck out there, and let's make today a profitable one. Back to you guys. Coach Tony. It's the
Hello,
Tony.
Coach Tiger.
Tony Tiger, as always.
Tiger and Tony, come on, man.
That's
You see
Tiger Tony.
the
That's right.
arrangement.
That's true.
We'll get them to flip it at some point, right?
Yeah, they definitely gotta. Come on back in.
Yeah, I know. They can do it. How you doing?
Man, I'm doing all right. I'm doing okay.
Yeah,
How
yeah.
about yourself?
I'm doing okay. I'm doing pretty good. Coming off of the best day here at Hola Prime that I've
Yep,
had. A little bit of a record on the P&L side.
I saw
Um,
that.
yeah. So I mean, it was a really interesting day. It wasn't honestly really wasn't by design because like yesterday was a pretty large P&L day. It was like
Mm-hmm.
5,500. Um, and that was obviously my record so far. I've only been with you guys for about 2 weeks.
Yeah, that's
So,
good.
yeah, it
Good
wasn't
stuff.
by design coming in and then like up 10 grand today. So, it was one of those things that can't lose. And it's like,
Yeah.
it's just a hot streak. Like you'll give it back at some point. That's trading,
Sure.
right? Can't get cocky
Yep.
for sure.
Yeah, average is average. That's the
Yeah,
most
I know.
annoying
See,
thing in
and
the
that's
world.
the other thing that we were talking about today is that well, it seemed as though every time I dropped my trade into the market, like it couldn't lose. Like it was
Yeah.
kind of tough there. So, I mean, I probably had like a win rate of like 80, 85%.
Yeah.
So I was like, see guys, like we're gonna totally revert back to like, settle in somewhere at like 60% win rate. So I
Yeah.
assume a stream of losses are on my way. you know.
So how do you go about that? Whenever you're on a real hot streak like that, do you find yourself just jumping into more trades? Do you find yourself sizing up,
Uh,
sizing down? Do you step away, take a walk? Just to
yeah,
kind of
yeah. I mean, it's kind of a combination of all that, right? Because, having been in trading, I've been doing trading for like 10 years, just about. And it's like, yeah, I've been here before. And it's just
right,
one of those things where it's sometimes you get into such actually a losing streak that when you start winning, it's just like, I don't even feel it anymore, dude. It's just like, it's one of those
yeah,
things where you're just like, I know I'm going to lose at some point. So,
yeah.
you know, yeah,
Well,
don't
that's the
pat
way.
yourself on the back too early.
Yeah, any mentors I've ever had have always said that you should get to the point whether you're up 10K on the day, whether you're down 10K,
Yeah,
doesn't matter. You should maintain the same heart rate. Easier
yeah,
said than
yeah.
done, but
Sure.
yeah,
Yeah,
that's
for
the ultimate
sure.
goal, right?
For sure. And
Uh,
that was the other thing is that like, I got to 10K, but it was through size. I had one trade. I took 10 NASDAQ contracts, which is like
yeah,
substantial risk.
yeah,
But the trade I had high conviction in the trade, and we were looking at a couple other technical indicators, and it seemed like it was a bullish trade. So
yeah.
it seemed like things were going our way, and 10 contracts. So we made $400 a contract. It was 4 grand in the entire trade. So things like that. It's just through leverage that you end up getting a $4,000 winner. So
Sure. Yeah. No, that's
but
great to hear, man.
obviously, being comfortable with the leverage is something that's important as well for anyone that's still learning about trading and leverage and trusting themselves. You don't get there overnight for sure.
No, that's
So
true. That
so
is
yeah, we'll
true.
see what
What's up?
happens tomorrow.
Yeah. Yeah. Tomorrow. Yeah. The next couple days, man. Woo, it's going to be fun. Getting ready for the Jackson
Oh, I
Hole
know.
season.
I
Yeah.
know. I heard you on the news there, and I was just taking a look for myself. I was like, really? Is there that many things on Thursday? And it's like, yeah, it's
Yeah.
like tomorrow is jam packed, especially on that 8:30 data dump. It's gonna be big. Yeah,
Well, I'm excited because, for Forex Fire, I mean, that's right in the middle of our stream. We don't often get a lot
sure.
of good data like
Yeah,
that dumping on us. So
yeah,
that's going to make for a fun day, a fun 4 hours for us. So, yeah, I mean,
yeah. It
it
should,
all
right?
starts. I mean, we start at 4 a.m. Central. I'm sorry, 4 a.m. New York time. So it looks like the
Hmm.
data starts 3:15. Yeah, we got some 4 o'clock, 4:30, 8:30. So
Yeah,
yeah,
yeah.
we're
So
gonna
are
have a
you
little
when
fun.
you're so when you're up? When you're up, I was going to say, literally, it's going to be hot. It's going to be so hot.
Yeah.
So when you're up doing that, are you taking trades like more in the short term, or are you like 1 hour, 4 hour type trader?
Still playing around with that, to be honest, because I mean I'm brand
Really?
new to the Asian and European sessions as it is. I mean I traditionally
Yeah.
stay on the higher time frames, but I do come down. Especially since I've been with Hola Prime, I've come down to the lower time frames where I got started
Yeah. So
at,
you
with
can
just
take
kind of
more trades. Yeah.
right, yeah. For example's sake, I mean, thankfully the way I traded works good on all the time frames. It just works better on the
Yeah.
higher time frames, right? So,
Yeah. Yeah. For
uh,
sure.
but yeah, I've definitely been getting into a lot more 15-minute supply and demand zone,
Wow.
bounces. So,
Yeah.
um,
Yeah. Which I mean,
yeah,
that's still even the 15 minute. When you're going like intraday or like daily, I mean, they do pretty much hold true. The
hmm
15 minute supply and demand zones. I was doing that. I was actually doing that strategy probably 2 years ago. Yeah, I was doing
yeah,
it 2 years
okay,
ago with the commodity futures contracts, more like
nice,
silver and gold mainly. Yeah, but I was doing supply and demand, and it was kind of tried and true, like
yeah,
15 minute, 30 minute, um, and then obviously like for timing my entry, I'd get a little bit heavier if when I like zoom out, go to like the 1 hour. I never really used the four
hmm
hour because I was still closing my positions at the end of the day. So,
yeah, that makes
the
sense.
4 hour was kind of like, maybe we get down to a certain level in the 4 hour, and it just so happens to coincide with like 9 or 10 o'clock in the morning, Eastern time. So, but yeah, I mean, I really like the supply and demand strategy for sure. And that was actually something I was talking to Sam today about. that, he's been with Hola Prime. I mean, he's with the company, so, and he's obviously been doing the live stream probably since they started doing the live stream. So I was talking to him, and, he's seen a lot of different trading styles, a lot of different trading strategies, talked to a lot of different coaches. And I asked him, has betting on the been on this being on the stream been to a detriment to your trading style, or have you picked up a couple of things, or has it just like not even affected you at all? And I'm going to ask you the
Hmm.
same question here.
Yeah. Um, it's kept me out of, well, it's been a little bit of an adjustment because my
Yeah,
perfect trading week consists of, soaking in the COT data on Sunday, Monday, seeing what direction the markets are wanting to go. And then
hmm,
my perfect scenario is opening up my trades on Tuesdays, and giving
yeah,
it 2 to 3 days to run. And then just, especially with the geopolitical environment we're facing now, definitely close them out before the weekend. But
sure,
prior to that, let's just say the last administration, right? I mean, I was okay
yeah,
leaving trades open over the
oh yeah,
weekend. So
yeah.
only if I've
Good
got a pretty
headline there.
decent, yeah, exactly, exactly. So long as I'm up 60, 80 pips, right? Because I mean, I'm typically
Sure.
chasing 150 pips or so, depending on the currency pair. But if I'm
Hmm.
up, 2/3 of the way towards my take profit, then I was okay with holding them over the weekends. I definitely
Yeah.
pay a lot of attention to the Sunday gaps. It's still playing with fire, but yeah, the way things are going right now, it's just too dang scary. I think the main thing that scared me away from that was when they dropped the bombs in Iran, right? Whenever they were
Iran. Yeah, yeah, yeah,
the nuclear plants. Yeah,
yeah,
that
yeah.
that
Like a
all
month ago. Yeah.
it came, and I lucked out that day because I had a trade open, and if I remember
Mhm.
right, it had a really strong gap on whatever it was I was trading, but it thank God it capped in my favor. But I
Yeah,
saw that,
yeah,
I'm
yeah,
like, nah, this is playing with fire at this point. So I'm just going to hold
yeah.
off on the weekend holds and make sure it close on Fridays, no matter where I'm at. To be honest, so
Sure. Yeah, I know, and especially now, obviously, you were covering it on the news cycle, the
yeah,
Russia Ukraine stuff that's going on, and who knows, who really knows what direction that's going to take. Hopefully,
yeah,
it comes to some sort of an end and they have an agreement, but it seems as
yeah,
though everyone's on the same page. But I mean, rewind what, 3 months ago when Zelensky and Trump had that first meeting in the Oval Office, and everyone thought like, "Hey, it's going to come together,"
yep,
and it was like anything but. And obviously, the world kind of found out the person that Trump's trying to deal with, be it
yeah,
Zelensky. How he's
yeah.
very hard to deal with.
Yeah, it seems like it. But yeah, to finish out your question on that, I've backed off of a lot of trades, just getting adjusted to the different trading sessions. So I haven't been
Yeah,
taking
yeah,
near as many. That's really my goal, is to start ramping up and jumping into it. Just, now that I've been watching these markets a little bit, I didn't want to just go gung ho and just jump into exactly what I do on the regular
yeah,
sessions. Kind of
yeah.
wanted to feel it out, but I'm starting to understand the price action a little better. So you guys in the chat should start seeing, some more trades coming out of me. And speaking of the chat, hello to Liquidation Lab, Spasm Grandeur. I love the name. We got John Dale Formalosa, Curve Trades. Let's go, Gloria. All right. I think I've went through all. Let's see what we got. Hello, Tony. Hello, Tiger. Let's get into the charts, Curve Trade says.
Yes.
Market's moving.
Yep.
Let's go. Let's go. Curve says, I'm short on gold. What do you think? Great one.
Ooh.
Well, we'll take a look at gold here. Do you trade gold much, Tony?
I sometimes I do. I'm more
Mhm.
onto silver on like the intraday basis.
Okay.
Um, but I think precious metals, I mean, silver, at least silver got blown out yesterday to the downside. And now
Mhm.
it kind of retraced like 50% of that downward move today. And it's just been
Yeah.
like range bound, like a 20-cent range. Well, it was tighter earlier in the day during the US equity session. It was like a 10-cent range. So like
Yeah.
couldn't really make much
Yeah.
money. Maybe if you had a Bollinger Band strategy, you could, scalp a little bit. But yeah, no, I'm
Mhm.
pretty interested to see where gold goes. Yeah, anyone else,
Sure.
shout out. We'll take a look at any chart in the chat for
Yeah.
sure.
Well, just to answer from a fundamental perspective, looking at gold, as always, guys and gals, I add a point to a currency or an asset if it beats if whatever report beats that expectation, whether it's GDP, the PMI, the inflation data, employment numbers, interest rates, so on and so forth. And then I take away a point if it missed expectations. If it simply hit expectations, it's a neutral. So we just move on from it, but. Look, and anything when I add everything up for COT data, retail positioning, seasonality, and then all the economic data that I track, 5 or higher is a bullish signal. -5 or lower is a bearish signal. So gold right now is giving me a 6. So just a little bit in the bullish camp. Silver is actually the strongest asset I'm watching right now. It's actually giving me a score of a 9. So that would be the 2 scores for the main metals. The only other bullish scores I have right now, and this has pretty much been the same in the last couple of days, I have a 5 for the euro US dollar. So that just barely made the bullish cut. And then the Nikkei out in Japan, it's given me a score of a 7. So that's one thing I'm going to be looking into this evening, see if I can't find a smaller time frame demand zone bounce. I got home late today because I had a memorial thing I had to go to with my girlfriend, her son's memorial. So, yeah, I didn't really get a chance to do too much digging. Yeah.
Sorry
crazy
about that,
stuff.
dude.
Crazy stuff.
Life is too short a lot of the time.
Oh, way too short. So we'll get through it. We'll get through it.
Yeah.
Strong woman, very religious. So she's definitely getting
That's
through
good.
it. Yeah.
Absolutely.
But yeah, that's the bullish items I'm looking at. And then as far as the bearish items, really only have 3. And the two strongest bearish items are the dollar Japanese yen at -11 and then the dollar Swiss at -9. So quite strong, but to be quite honest with you, Tony, I don't like the price action on them at all. So
I hear you.
We'll take a look at that. And then US oil is a -6 as well. So those are the 3 bearish items I'm looking at. There's some others that are close, but no cigar. I'll still look at them on a smaller time frame, see if I can't get a quick scalp, we'll go at it. But yeah, we can. Did you have anything? Did you want to show anything on your chart before we skip over to me?
No, really not yet. I'll probably be drilling down and looking at the smaller time frames, but yeah, I mean, you can take it away for sure. I was just pulling up that crude oil that you were talking about. I mean, damn, like it's like down $10 in the last 12 trading days. It's unbelievable.
Yeah.
The geopolitical risk premium getting sucked out of that.
Yeah.
So yeah, back end, anytime you want to show Coach Tiger's screen for sure. We can start jumping into some of the longer term stuff. All right, you're up.
Yeah, as far as that oil goes, I mean, price has recently bounced off of a daily demand zone, so I'm a little hesitant to pull the trigger on any shorts in this area because obviously the higher the time frame on a zone, it's always going to trump, no pun intended, the smaller time frame zones, in my opinion. So we've definitely gotten kind of a triple bounce off of it, and then it's coming up close to let me see, I'm on a 30. I need to go to 30-minute supply. Actually, I'm just going to full screen this, get rid of my second chart. So yeah, we're kind of in this supply zone area. That's really what I'm looking at. I do like how it gapped all the way down. Now again, it gapped into the higher time frame, so it's a little narrower of a range than I prefer. So I'm just going to see what happens if and when price hits. I mean, if I just get a super strong reading to the downside, maybe get my volume spread analysis candles to jump like 3-4 times higher than the more recent candles, then I'd definitely be interested in possibly getting into short on that. But definitely buy to cover somewhere above that zone. It's already been touched and mitigated, but that's really the only real play I see at the moment on U.S. oil. Yeah, because you start looking at all this mess, it's just too wicky. Not really getting any strong vibes off of this price action up through here. But again, the way that gapped down on the Friday I should say on the Sunday open here in the States, it's giving me a little bit of excitement to see what happens when it hits. But yeah, that's the dollar, or I'm sorry, that's the oil. And then what was my other two? So dollar Swiss, dollar Jap, as far as the bearish items I've got. Let me see here. The only thing I saw, and this is very similar to oil, like kind of a narrow supply area up in this area here at the 147.70. I'm sorry, 147.77 level. So that might be a little bit of a play, but I feel like I'm kind of stretching that because ultimately I like the higher time frames up here. Now, obviously, the origin of a strong move, as you probably know well with supply and demand, it's obviously the highest probability move, but we're still a long ways away. We're some 200, 250 pips away from these this little zone on top of a zone I've got here. But coming down in the middle of that supply zone there is actually a 5-minute time frame zone, but it's like 30 pips wide. So I love the range on that thing. And it's kind of butting up against a former resistance point, just going right through that. So that I would definitely be okay putting in not quite a full position there, maybe a partial position. If it keeps going, then ultimately, higher up at the 150 level is going to be my favorite spot. But if I get into this small time frame, that the one I looked at on what was it, 15 or 30, 15 minute, I don't know. I just feel like I'm playing with. Speaking of, U.S. oil alert just went off, so I'm gonna take a look at that in a second. But yeah, I mean, just looking at this zone, I mean, it had a pretty good volume, pretty good tick volume, spike. So I do like that. You definitely see some type of bounce come off of it. How much is obviously unknown at this point, but with it being such a bearish, fundamental score, like I said, that's a minus 11. So that moves it from bearish to very bearish. So definitely like it, but just give me a little bit of a discount. Again, if I get a nice VSA candle spike, I might take a small stab at that. Maybe give it a little bit wider of a stop loss. Maybe something above this point here. Collect this liquidity. So that's a little bit of a master pattern liquidity right there as far as contraction legs. So probably be interested in that. I mean, maybe perhaps I could have taken a sell here, but I didn't really like the volume, so I wasn't too thrilled with it. That's why I didn't even draw it up. But this one's the best in my opinion. It's got a nice fair value gap that created out of that, which looks like it did get touched here. But again, for me, I'm more interested in the unfilled orders, potential unfilled orders.
For sure. Yep.
So that's where I'm at with dollar Japanese yen. Before I get to the oil, before I get to the dollar Swiss, I'm actually going to look at oil again because it just hit my alerts. Let's see what we got. 30 minute. Okay. Yeah. Don't really have a lot of volume yet. Obviously, it's early on in the Asian session. So now I put a white line in there. Why did I do that? Was that maybe a 5-minute where the 5-minute candle hit? Oh, yeah. Oops. I didn't mean to move that. Yeah. So I put that white line at the proximal line of the 5-minute candle, which is within that higher time frame. So I like those confluences. When I see it looks red, but it's actually, if I turn off my indicator, it's actually green. So I got that green candle before the big spike. That's just looking at it on a smaller time frame. I just wanted to see where price kind of collected within that zone. It looks like it collected in that area. So I'll probably wait till it touches that white line. I just want to see it go a little deeper into that zone. But yeah, again, if we get a spike, volume spike, then maybe. But looks like we opened pretty strong for the, fairly strong for the Asian session. So we'll see.
Yeah, literally.
I'll take a look at that again. Here
jump on and ride that up.
Ride it. Dollar Swiss. That was my other bearish item. Yeah, nothing's really changed on this. I kind of drew up what I would like to see the other day. Just get price kind of come up to that zone there on a 1 hour, I believe it was. I guess that was a 30-minute. Yeah. So it's just kind of looking at this supply area here, looking at it on a 30-minute time frame. Not the greatest. I mean, volume kind of spiked right on this candle here. So I don't know. I may change my mind on that. I'm subject to change my mind. Women ain't the only ones that can change their mind, Tony.
Yeah, I hear you.
But as far as anything nearby, I feel like I'd be diddling in the middle if I found something in this area, just looking at it on the higher time frame. Because I kind of look at this curve. So the top of this high point, this low point, you know,
Yeah,
trying to stay away from the middle, diddling in the middle. So that's why I'm more so interested in that
yeah.
area. Not the greatest, but ultimately, it's ways away. But my favorite spot would actually be clear up here. This is a 4 hour supply that's within a daily supply. The daily
Mhm,
candle's already been, or the daily zone has already been touched. Obviously, it's already been mitigated through there. But
mhm.
and it came right close to that 4 hour candle, but it didn't touch. We missed it by about a pip, maybe a few pipettes.
Unreal.
You don't hear that word very often. The
No,
pipettes.
is that a terminology that they actually use? It really drills
Yeah,
down that microscopic.
yeah, yeah. So obviously,
Wow.
yeah, the second digit is the pip, and then the very first digit
Yeah.
is the pipette. Yeah, they taught us
Yeah,
that
yeah,
in
yeah.
the trading classes I went to, but yeah, I've never heard it used. So I finally get a chance to
Sure.
use that word just for fun.
I know, honestly. Yeah, I mean, this like you call it diddle it in the middle. It looks like Coach Michael's M pattern or whatever he
Yeah,
uses on his technical analysis. So
yeah,
I mean, you might want to he could probably take a look at this one too. USD
yeah,
CHF.
yeah. No, definitely. I'll write that down. USD
Yeah,
Swissy.
honestly.
Yeah, well, it's funny because he talks about when, as far as entering trades, he waits for the
Yeah.
W, he waits for the M if it's the
Yeah.
opposite end,
Mhm.
to kind of confirm itself, whether it's the double bottom, the half a bat, like he
Yeah.
calls it a half a bat, right? So obviously you got your double bottom like this for everybody in the chat, right? And then he would essentially be buying in this area. And obviously the same is
Hmm.
true in
Hmm.
reverse. But he calls this a half a bat. If that second leg kind of goes about that distance before going
Yeah.
up,
Yeah.
then he'll just wait and buy at the above the crest of the middle of the W of the bat, whatever you want
Yeah.
to call it.
Previous high. Yeah.
Yeah, so he would essentially be buying in this area.
Yep.
Now,
Yep.
if
Yep.
if if it's a double bottom, then he would essentially be buying on a closed candle in this area like that.
Yeah. Sure. Yeah.
So it really just depends. He says the double bottom has to be within 7 to 10 pips. Now
Hmm.
I don't know if that's universal or if that's dependent on the currency pair or not, but if
Hmm.
it's
Hmm.
more than 10 pips like that, then he'll be buying up here
Yeah.
above the
Yeah.
crest.
Yeah.
And then
Yeah.
obviously if it's a head and shoulders, then it obviously would be a little different.
Yeah. A
You
little
got your
different. Yeah.
dun 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 dun. So you would be taking this one, I believe. You'd be
Yeah. Yeah.
taking
Yeah.
the break of the neckline. Yep.
Yeah.
So
Yeah.
it's really interesting, and I've honestly, Tony, I've actually been looking at that a little bit on
Hmm.
my
Hmm.
entries because he always talks about it's best to get that confirmation versus just buying on the right side of the V, what he calls the V.
Oh yeah. Yeah. I know.
Avoid
He
the
says
V.
stay away from the V. Yeah.
Stay away from the V. The V can get you in trouble.
Yeah. It can for sure.
So yeah,
Been
so
there.
you're just essentially just waiting for that confirmation, making
Yeah.
sure that you get that double bottom or whatever. So it's
Yeah.
really really good stuff, and I've actually been kind of playing around with it in my repertoire, so to speak. So
Well, that's good.
because I've never really, I mean, I've always heard of head and shoulders, always heard of double bottoms,
Mhm,
but
mhm, mhm,
never
mhm.
really thought about it in the context of actually pulling the trigger on the trade.
Yeah.
So
Yeah.
hey,
Yeah.
us coaches learn too, ladies and
I know. I
gentlemen.
was gonna say
I mean,
every
I'm,
once in a
I'm
while.
12 years in, but there's still more to learn.
Old
Sounds like
dog, new
Tony's
tricks.
about 10 years, right? So
Yep. Yep.
that's the one thing I love about trading. It's the more I learn, the more I realize I need to learn.
Yeah, for sure.
Right?
I know.
They're
I
really
know.
as
It's
simple as
always
that.
it's
So
always about what you don't know. I mean, it's so true in
yeah,
trading.
yeah. Looks like we got a poll question. After the huge U.S. inventory drawdown, but easing Ukraine tensions, where does oil head next? So are we going to push higher on demand? Are we going to pull back on geopolitics? Are we stuck in a range? Or wait for Jackson Hole? Some pretty good choices. So be interested to see what everybody votes on that. We'll definitely come back to that here in a bit. Let me see here. So I have already went through that. I went through that. Silver and gold.
Yeah, we'll take gold for sure.
Gold, yeah. Somebody was asking about gold. So yeah, fundamentally, gold is a +6. The retail traders are net long as well, which is not going against or not doing well for the contrarian signal, right? They're in the same direction. Obviously, the big banks and institutions are pretty well net long, I think. Let me go double check the institutional positioning on that. Gold, yeah, gold is actually the strongest thing I track. So gold, they're net long, just so everybody knows. The institutions, the big banks, they're net long 83%. So 83% of their positioning is long to only 17% short. So probably doing a little hedging, right? Yeah. When it comes to the week-to-week numbers, gold actually lost about 1%. So they decreased their long percentage about 1%, which obviously that was the report from Friday, which is only current as of last Tuesday. So at this point, the data is a little older. It's 8 days old. Okay. So, but yeah, I'm definitely looking for it to move up. So let's see here. It's just been stuck in this boring sideways trend since late April. We had the Liberation Day tariffs come on, and then a little bit of craziness for a while, and it's just ever since it's went sideways. It's been boring. It's been nonstop boring. Smaller time frame, it is a downtrend because we do have lower lows, lower highs. On that 4-hour time frame, but I'm ultimately looking at this demand zone down here because we had a really good fair value coming out of that. And then I do have a smaller one right here. I think that was a 15-minute zone. I try to remember to label all these so I don't have to scroll into them. Oh no, that was a 5-minute. Yeah, so we're getting down to tiny time frames with this, considering how far it's having to return from a much higher price. But I mean, I just really like the volume on this leg out candle right here. Super strong volume for quite a few candles here. So I set my alert just a little bit ahead of that. What I'm probably going to do is just lump all this together as a zone on top of a zone, because this again is that 4-hour, and just make one big zone out of this thing. Probably just do something like this. So just make that one big demand zone. Because I mean, if we wanted to be super aggressive, take that 5-minute, put your stop loss underneath. But nah, I think I need a little more. I think I need a little more confirmation.
Yeah,
the higher time frame zone is going to be a lot stronger than a 5-minute zone. So, yeah, my bias is bullish overall, but it's in a downtrend. So I can't. Whoever it was that posted that. Yeah, I mean, I'm looking for a downtrend to get down to my zone. So if you sell the inventory, then I'll take it off your hands if we get down to that level. Is that a deal?
I'll take that deal every time.
Yeah. But if you're selling,
I mean, unless they're going to charge you that, what is it, like 10-15% commission over spot? It's freaking ridiculous.
Yeah.
Some of these precious metals dealers.
Yeah. No, I've been actually getting ready to start doing some research on a lot of these gold dealers because I'd like to start just adding my own physical stash myself.
Yeah.
Just
I mean, gold long term going to 4,000, right, towards the end of the year.
Yeah. I'm not a doomsdayer by any stretch, but it'd just be nice to have something like that lying around in a storage. I I was looking to possibly sell this morning, but I never got the trigger candle. I was kind of looking at this 30-minute candle here as a potential drop because we did have some pretty good activity in that area. But yeah, just watching this candle on the way up, I never got a reversal look to it. Didn't get the volume, so it kept me safe. I stayed out of that.
Yeah,
But I could definitely see where people would have hopped into that area. I don't know. I'm not really seeing much of a zone to sell in. This is just too much congestion for my taste right here. I don't know if you go a little higher up. Yeah. You start going any higher, and now you're in an uptrend, right? I just don't see anything. But hey, just keep in mind whomever that was that posted that as far as the gold trade. Just keep in mind it's got bullish fundamentals right now, and especially with all this, like we've said for the last 3-4 months, all these geopolitical risks, gold, silver, oil. I mean, it's going to be quite volatile. So
yeah,
so
we'll
yeah, but
see.
yeah, that's ultimately where I'm at. Just that lower demand zone for me, right in this area.
For sure.
Now that's still within that sideways chop area. Ultimately, I'd like a breakdown to the 3,200, 3,220 level because I do have
You
one
think
there.
overall it comes back down before it goes takes a leg higher?
I'm so neutral on it right now. The good thing is I don't have to be an economist to
Yeah, yeah,
trade.
yeah. Sure.
I just see what the price action is and try to jump aboard. Just try to imagine where the
No,
banks are trying to take it. Um, yeah, I'm afraid to even make a guess until the Jackson Hole Symposium's over with. So I
yeah,
guess
that's
ask
true. Of course.
ask me that question on Monday, and I might have a better answer.
Yeah, I know. I hear you. It's going to be one of those
Right.
things where there's going to be a ton of chop introduced into the market because of Jackson Hole, and
Right.
obviously the market's got to digest that all throughout Friday, and whatever the
Mm-hmm.
heck happens tomorrow with the headline risk. But we'll see. We'll see. It'll definitely spur up some movement
Yeah.
in the gold contract. That's for sure.
Curve trades. You said it too. Wait for Jackson. Exactly.
Hmm.
Exactly. I mean, I ain't trying to put any long term trades in right now. I'm just
No.
looking for some shorter term stuff.
Looks like
And
liquidation
short
labs
on.
is a long on gold. Yeah, gold looks good for longs. Yep,
Yeah.
you
Hey,
are right.
here's the beautiful. There's the beautiful thing. Liquidation lab. You're long. Curve trades. You're short. That's the beautiful thing about trading. That's what makes a market,
Hmm.
right?
Yeah, yep, yep.
Yeah. And you could both be right. That's the thing. Depending on your time frames, maybe one of you are shorter term, maybe one of you is higher term. Like I said, I mean, curve trades, you could definitely be right. On a shorter term, dropping it down, make you some profits on the way down, and there again, I'll be waiting for you at 33.10. I'll be happy to take it off your hands and take price the other way, right? So you could both. That's the way I'd be looking at it. So you could both be right. All just depends on your trading time frame and yeah, your strategy. So that's the beautiful thing about it. But yeah, that's a little bit about gold, silver. Let's see here. Yeah, I'm still liking this 1 minute, or I'm sorry, 1 hour demand down here. I like this zone a lot because it had 1, 2, 3, 4 basing candles. I prefer 1 to 3 candles. Like I don't know how you did it when you traded supply and demand, but I
Hmm.
don't like price to stay in that spot for long. I want to see
Yeah,
it just
yeah.
have.
Well, it depends on how quickly it's moving into that zone,
Mhm.
really. Um,
Right.
I mean, if it's like some sort of economic data dump, and we're going to the downside to some sort of longer supply demand zone, then I mean, I guess you could sit there and wait with those resting orders. Uh, but I mean, you definitely want to take a look at the depth, the market depth, to see how many are
Mhm.
out there. But usually, I wasn't trading like the 8:30 a.m. Eastern time data dumps because you just never
Yeah.
really know. But
Right.
yeah, I mean, on the kind of just when things are trending, and it depends, right? Like if you're looking at the 5 minute, I probably allow for like 3 to 5, probably like 5 candles, trading within that zone, making sure that we're not having a huge like bearish sentiment to the downside if I'm
Mhm.
looking to get long. Um, But again, also how quickly did we get there is one of the things that I would always look at. So
Yeah.
you just got to be cognizant of the
Yep.
holistic market view, especially when you're looking at like the 5 minute or 2 minute.
Yeah. Yeah. No, that's exactly right. I actually have a scoring system for supply and demand zones. But yeah, the reason I like this one is, yeah, nice leg in, 1, 2, 3, 4 basic candles, nice screaming push out,
Mm-hmm.
volume spread spike. I mean, that's ideal. I love that. But yeah, I know I agree. Now this is kind of a hot topic in zone, like the speed, right? So
Yeah.
you're saying you prefer if you're buying a demand zone, do you prefer price to come down rather quick, or do you prefer it to kind of lollygag and go like 45-degree angle? Let's just say a little
Yeah, I'd say
slower.
45 degree. Yeah, 45 degree. Like
Hmm.
again, like why is it getting down there? Okay, so did we have like a huge news event that's just giving us a bunch of bearish sentiment to push us down? Is it happening really quickly? Is it happening over the course of an hour? And the market's kind of just fumbling around to see where is the next level, and I can identify it through a demand zone. Um, yeah, so more of the 45 degree,
Okay,
but
so
I
not
mean,
just
you no, but like you look at some of these things, like I'm looking at your chart, 12 noon on Friday, August 15th, spiking up to that supply, that little red zone, and then just immediately rejecting down. So go to the left a little bit, to the left. Literally the high of your chart. So
oh
like we're
yeah.
getting up there like very quickly. So
Hmm.
this is Wednesday. So this is probably, I mean, that was right at, oh, that was like right after probably some sort of data dump on a
That's
Wednesday. So we had like really bullish sentiment,
August
and then the
13th.
market closed and then immediately like opened down, not gap down, but it just opened to the downside off of that, supply zone. So
Employment numbers maybe for Aussie.
uh,
No, yeah, that's red folder.
uh,
Oh no, I don't know. Well, President
I
Trump was
don't know. It
speaking.
looks like it happened at
Right.
1800. So like right, so that's right at the open of the futures
Oh
market.
yeah, yeah. The
You
red
know.
is the Asian market, just for context to
Oh, is
everybody.
it? Oh, okay. Yeah, yeah, yeah.
Yeah, yeah, yeah. I got open of Europe, New York overlap, and then the
Yeah.
latter
So
part of
again,
New York.
it's like, I never really shot for that type of stuff where
Hmm.
I was like preemptively putting like sell orders, limit sell, like up into that level. Um,
Right,
but it was always interesting to see like when you had like this like very high velocity getting us to that level, and then just the immediate like rejection, or like the immediate support. Um, but yeah, I never really wanted to do that because I'm always of the adage of, again, like the train's coming, don't step on the tracks. Like I don't know if it's going to stop, I don't know if it's going to keep on going. So
hmm
you know you know
yeah,
and like
yeah.
still, like this is a 1 hour, it's a 1 hour chart. So like, I mean, I would like want to get more confirmation that there are more like sellers at the top of that red zone by looking at like the 4 hour, just to like give me more
Right.
conviction behind the trade before I actually stepped in. But
Yep.
yeah, yeah. How do you usually do it for entry?
Um. So I like to see it go into the zone, and then I like to see. I mean, if I had it perfect, I'd like to see an engulfing candle going the opposite
Hmm.
way,
Hmm.
and I'd love
Yeah,
to see
sure.
the volume
Yeah,
spike at least 3, 4 times relative to the
the
previous
average.
handful of
Yeah, yeah,
candles. Because I want
yeah,
to see, I want the institutions to show me that they're the ones active, because they're the
yeah.
ones that
Sure. That's their
that
level. They own it. Yeah,
institutional demand supply. Yeah,
yeah,
so that's why I stay out of the middle, because
yeah.
when you get all the diddling in the middle, that's retail traders. So I tend to ignore
Where did
those
this
supply.
diddling in the middle come from? Because Coach Paul was saying it today on stream, and Coach Troy was like, "What? What did
Oh,
you
he
just
probably heard.
say?" Like,
Yes,
so is this from something? Is there a reference I need to look
yeah.
up?
Well, it's when I took my classes with
Yeah.
Online Trading Academy. They talked about the curve analysis. So like I'm just using dollar South African rand as an example. But typically, like if I'm trading on a 4 hour demand zone, Well, I want to look at my trend on a daily, and then I want to use the weekly for my curve analysis. So essentially, what we do, and I kind of jokingly throw up the Hungarian flag to illustrate this as well. Basically, if I'm looking at this swing low right here, and I'm looking at this swing high, well, then I'd be wanting to buy on the bottom 33%. I'd want to be obviously buying at discount or selling at premium if I'm shorting. And then the white part of the flag, which is red over here, I just use the fib retracement tool. It's just quicker than pulling out the flag every time.
Yeah.
Essentially, the white part or the red part is the middle. So that we were taught, don't diddle in the middle, because when you're diddling in the middle, that's where you're getting chopped to pieces. So So for this example here, again, this is a weekly curve analysis. I go down to my daily to look for my trend, and then start to see, okay, you can't tell it, but that is a little bit higher of a low. That's obviously this is our higher high. Actually, that's pretty close. But either way, let's just pretend these were higher lows, right? The idea is, as price comes up, we want to wait and buy into the market off of a demand zone that's underneath, like down in the red part. I'm sorry, down in the green part, down in the bottom third, so that you're buying in discount. So essentially, you'd be looking to, buy a demand zone that comes out of an area like that, just as an example. But the goal is to buy in the bottom third, because that's typically where the bigger discounts are when you're looking at the curve analysis. So, but that works great. I mean, it works. I like it the best on those time frames, but you could go down. I mean, if you're a 15-minute trader, 15-minute time zone, then you just look at your trend on a 1 hour or 2 hour, right? And then you just look at your curve analysis on a 4 hour or a daily. I mean, it really just kind of depends on your tolerance, everybody's tolerance. But anyway, I just thought that was a good example. I'd show dollar, South African rand, even though I don't trade it. It just presented a good example to show.
Yeah. Really respecting the levels. That's pretty good. I mean, okay, I fully understand it now, right? So that's pretty. It's the same thing for me. I mean, I'm trading, NASDAQ majority of the time, and I do like standard deviation moves and stuff like that, and I had basically identified levels. And getting chopped up in the middle when there's really like no direction is the worst thing that you could do. Is the worst thing that you can do as like a new trader as well, is just like flip-flopping, right? Is it going up? Is it going down? No, I don't know. I have no idea. There's like no direction really. I've said it like numerous times on the stream, like myself, Coach Tiger, any of the coaches can't tell you if this contract is going up, down, sideways in the next 30 seconds. So like, don't just arbitrarily hit the buy or sell button here.
Yeah. And there's a lot of supply and demand traders throughout the world, but I just think that that's one odds enhancer that I was taught there. And I like it. Now, do I personally still trade in the middle sometimes? Do I still sometimes trade in the upper part? Try to buy sometimes, but that just comes with time and understanding the context of these zones. But if I have a bad streak, well, I just take a step back, when in doubt, zoom out. Oh, you dummy! It's because you were diddling in the middle, or you were buying in.
It's always funny. It's always funny. Like, you usually catch yourself. You're like, okay, I took this trade, lost. Took my next trade, about to lose. And it's like, okay, what am I doing wrong? And you zoom out and you're like, oh my God, I'm in between these two levels. I shouldn't be doing this,
Yeah.
I mean, it happens. It happens to the best of us every once in a while.
Sure. Yeah, for sure. We're getting a nice bounce off that supply. I just didn't really care for the volume that much.
I was looking at that USO, looking at the crude oil contract, but I don't know. Looks like a couple of the commodities had a spike. Silver had a little spike there too. I wasn't sure if there was a headline that maybe came out. A little bit of a spike, a little rejection. Maybe we'll get some support on silver right here, 37.89, 37.90. Looks like crude oil is definitely breaking. Some of the MAs that I look at, like the 9 is a shorter one, and then the 21 as a longer one, especially when I'm looking at like a 5-minute chart or a 2-minute chart or a 1 minute, whatever.
Nice. Yeah, I just
And it
don't
looks
really.
like, yeah, we're breaking down below. So maybe we're totally going to revert to this little upside move, but who knows?
Yeah, I mean, as soon as price touched that 30-minute supply zone, I mean, that's where the volume started to spike. But
Yeah. Yeah.
um, I don't know. I don't know. Maybe I'll look for the W. I'm sorry, the M.
Yeah. The
Maybe
M,
come down a
right.
little bit, come back. If I can get a nice rejection off of that, maybe I could enter right there, like
Hmm.
right in that, or just on the way out of that zone again. I think I need a little more
Sure.
confirmation just because it is such a narrow zone.
Sure.
Yeah. Don't play with
Wow.
the V. Coach Michael, in the back of my head there. Stay away from the V.
Yeah. Yeah. 100%. He's always right. I mean, he does have a pretty good hit rate with that strategy there.
Yeah. Yeah, because I mean, I've always just done the V, you know. I mean,
Yeah.
but I just never really gave it that much thought, like until starting to listen to him. So yeah, I'm definitely keeping an eye on it. Like
Yeah.
I would have already probably been in this trade early on in my career. I'd have been short right there. But
Yeah. 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 100%.
I pay a lot more attention to how much activity picks up. Now, clearly that was a big spike in activity, but I just want to see it roll over and have that. I don't want to see the volume just go down, or I should say the activity take volume.
Sure.
I don't want
Yeah.
to see
Yeah.
it go
Yeah.
down. I'd
No,
like
no,
to
I hear
see it
you.
elevated. So, but anyway, yeah, I'll revisit that here in a minute, see if anything changes. I think the only other thing, man, was Nikkei, and then I can pass it on over to you, see what you got rolling.
Yeah.
Nikkei.
Sure.
Yeah, this is obviously one of the higher liquidity assets since we are obviously in the Asia session. Um, so Nikkei, just a refresher, positive score of a 7, so that's a bullish sentiment. The big banks and institutions on the COT report, Commitment of Traders report, did increase their long percentage. The retail traders are net short, so that is a good contrarian signal. Seasonality is bullish, trend is bullish. GDP report was bullish. PMI for the services sector, the retail sales, all that was bullish sentiment, bullish bias for the Nikkei. Really, there's
Mm-hmm.
only
Mm-hmm.
3 things going against it, and that's the manufacturing PMI, the PPI report, the PC, and the employment change. So that's all essentially going against it. But you add it all up, pretty positive score. So we'd love to buy this market, and I think I've already identified my favorite spot, which is this demand zone right here. That's an old news right there, Candle. Get rid of that. But yeah, this demand. The only thing I would nitpick on, I don't know that I want to claim that that's a leg in candle, that red one there. I kind of feel like that's 1, 2, 3, 4, 5, 6, 7 basing candles. Might be too many. And the other thing is the VSA candle actually went down on that expanded
Sure.
range candle. So I'm not too excited about that. So yeah, that's just another example
Yeah.
where it,
Looks like the chat's looking at the USD ZAR. It says
yeah,
South African Rand. Complex for me. Yep.
yeah, I
Spasm
don't,
grandeur.
yeah, no spasm. I don't trade it either. I just only looked at it because it presented the perfect example of showing the curve analysis
Yeah. Yeah.
with the
Yeah.
trend and the supply and demand zones. That's the only reason I mean, there's other examples, but I just happened to find that a couple of weeks ago, and I did a little bit of probably a 30-minute. I just kind of drilled down into the method a little more. I need to figure out which show that was. I think it was 2 Wednesdays ago, and it would have been 2 hours and 15 minutes into the session. But yeah, I spent about 30 minutes going over curve analysis, trend analysis, supply and demand analysis. So maybe
Mm-hmm.
I'll try to find that and see if we can't get it bookmarked or something. Or maybe I'll just make a video on it. They were
Yeah.
asking me if I
100%.
wanted to make some content. So I'm going to do that. I'm going to write that
Perfect.
down. Yeah.
Yeah. Yeah.
It's high.
For sure.
Well, I've already done it. I did it on my own personal YouTube channel, but I think now that I'm with Hola Prime, I just need to redo it. Um,
Yeah. 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 Yeah.
We have an awesome professional team that handles that kind of thing and does excellent work with all the videos and shorts and
Yeah.
everything. So,
Yeah. We
but
were looking at your little like lifestyle video that you had out there. That was awesome.
my bowling one, the one you're talking about?
Yeah, 100%. Yeah, you were looking at all the trophies and stuff.
Oh yeah, my bowling pin trophies.
You're like almost a professional there, man.
Eh, I mean, I've competed in tournaments against all the pros. I mean, I've gotten into
Wow.
some PBA tournaments. Yeah,
Uh-huh.
just never really had at the time, never really had the funds to go out on tour. You gotta get
Yeah,
sponsors.
yeah.
I
Oh
think
God, yeah.
at one time they said it on a very minimum end, it would cost you about $20,000-$30,000 just to, for entry fees and for all
Oh
the
my
different tournaments.
God.
At the time, there were like 10,
Wow.
12, 15 tournaments. But yeah, that's
Yeah.
hotels, that's your eats, your gas going to and from, your entry fees. So yeah, they typically get sponsors from the bowling
Yeah.
equipment to, pay for entry fees and lodging and that kind of thing. So
You sure?
I
Yeah.
was
Are you still
I was
doing it,
good.
or are you?
You know what? I've actually taken a break from it. I haven't actually picked up a bowling ball in about a year and a half, but
Yeah.
I am
What
getting
weight are
the
you
itch.
using?
15. Yeah, I don't. I used to
15.
use 16-pound ball, but the science has gotten so much better with the bowling equipment that, like,
Yeah.
unlike in the past, nowadays you don't really have to have the heaviest ball because they just flip and hook so
Wow.
hard as it is. Um,
Yeah.
but no, I usually just stick with 15. It's just good
Yeah.
comfort level for me. But yeah, I grew up on
Yeah.
the heaviest ones, the 16 pounders, back before it had all the back before it had all the science built
Yeah.
into the core of the bowling ball to help it
Oh
with
yeah,
continuous.
sure.
Yeah. So
Yeah.
no,
Do you
15
know what they're actually made out of, like in the core? Or is it different materials,
ceramic.
or is it usually
Yeah,
stainless?
there's
Really? Yeah.
ceramic. I don't know all the details. I should know all the details because that's all I ever studied. But I never got into the science of the bowling balls that much because I've always had somebody that was a really good friend that ran a pro shop, so they would always just take
Yeah.
care of all my bowling equipment, my shoes, my
Oh,
bags,
that's
everything.
awesome, dude. Yeah.
And they
Yeah.
know my
That's
bowling
awesome.
style, so all I got to do is say, "Hey, Brian, I need a ball that does this, this, or this," and then he says, "I
Uh-huh.
got what you
Uh-huh.
need." So you go and pull
I
it
got
out.
it. Yeah.
So I've kind of always been spoiled that way, to where I didn't have to learn about all the science. No,
It's
it,
pretty cool. That's awesome. Well, I mean, we got some bowling alleys around here, but like in the Northeast, it's like, I mean, at least in like Massachusetts, like it doesn't seem like it's like so popular, like which is unfortunate, you know.
mhm.
Like obviously because like they're just totally overshadowed. Everything is totally overshadowed by New England sports like football,
Yeah,
baseball, Celtics, basketball. So it is what it is. But yeah,
yeah,
I mean, I definitely feel as though like um, bowling has grown in popularity, if I do say
yeah,
so.
yeah.
Over the years.
It's really big here in the Midwest, especially. The year I graduated after high school, they added a bowling program. I'm like, where was this when I was in high school? But
Yeah, I know. I
yeah,
know. I would have been the captain D1. Yeah.
yeah, for sure. No, Wichita State here in Wichita, Kansas, they're like the
Yeah.
premier bowling school. Like they're winning the national
Yeah.
championship all the time.
Wow.
So yeah, we got it all
That's
right here. But
crazy.
no, I miss it. I'm getting close to getting back into leagues. I'm getting that itch back, and I miss all my tournaments and
Sure.
tournament hopping and national tournament. I miss it all. It's great.
Yeah. Yeah.
Um,
Oh man.
Anyway, yeah, I think I'm pretty well caught up for my main ones. I mean, again, I have some other ones that aren't quite giving me the bullish bear signal, but they're close enough to where I'll take a look at them on like a 15-minute zone. So I'll do that. I'll
Sure.
do that now. If you got anything you'd like to share, Mr. Tony.
Um, I'm kind of just looking here, and
Mm.
it's so tough. It's tough trading right now
Yeah.
for especially me when I trade the
Yes.
Nasdaq. And then the only other thing that I look at is like the silver market overnight, because sometimes the Hong Kong session really starts pushing things around. But right now, like I'm just trying to make sense of this move, like both in crude oil, both in silver. pop to the upside, and now we're just kind of like fading the move in both of them. So I don't know if it's going to continue to come down and like revert back to the do nothing that those charts were showing on like the 5 minute, like over the last couple of hours. But no, I mean, you please carry on. I'm still just looking to see if I can make some sense of this.
Oh, okay.
We'll get a trade on.
Yeah, I mean, this is obviously a red candle. I wish that were a green candle. Because if so, I don't know. I'm going to go down to a smaller time frame, but actually, let's just go back to my one screen real quick. Let's see here. 4 hour, 1 hour. I don't know. Let's see if this qualifies as a supply zone. Well, the red candles. Let's go to a 30-minute. I mean, possibly. We could possibly call this a supply zone. The only reason I'm fighting this in my head is because it's normally a green candle before the big down move, right? But that's not always the case. I mean, essentially when you get the basing action, you can sometimes just get just the wicks like that. It's just not the prettiness I like, in other words. So I'm just having a little bit hard of a time with it. I mean, on a 2 hour time frame, it's 2 candles. The thing I'm really excited about is that big red candle right there, that VSA candle on this big expanded range candle. So potentially we could look at that. One thing I want to look at is my master pattern indicator. I want to see if we're getting any contraction points here. Okay. So we're kind of getting some contraction boxes in this more near term. So everybody at home, just what I mean when I say contraction box, price goes sideways for a while. At some point, price leaves the boxes, collects liquidity down here. Maybe it bounces back to collect liquidity right in that supply zone, and I could short it. Possibly.
Yeah, I'm just going to if it gets there.
Yeah, I'll just put an alert on it. We'll see what happens if and when price gets here. Right there on that proximal line. Da-da. We'll throw it out through Friday because I know everything's changing on Friday. Possibly. There. So I got an alert just ahead of the proximal line of that zone. We'll see. We'll see what happens. Might jump into that. Let's see. So that's 15-minute. The volume doesn't really start until, actually the volume really starts picking up. Yeah, I'm gonna edit that a little bit. Let's just go to the proximal line of that green candle. We'll just stick with that. Keep my alert just a little bit underneath the proximal line. Yeah, because all this is junk over here. So it's junk. Doesn't look bad on a 2 hour. I mean, oh shoot, I'm looking at the wrong one. Yeah, it doesn't look bad on a 2 hour, but still.
2 hour looks good. Yeah.
Yeah, just not quite the candle structure I like, but it works. We'll see what happens. But yeah, just looking down deeper, I do have this demand, a 30-minute time frame I was kind of keeping an eye on as well. Turn off my order block tool. So yeah, I was kind of looking at this candle here. Nice last red candle down before a push up. Pretty good volume in this area. So it's not quite the origin of that move, the overall move, but we'll keep an eye on it. We'll see what happens. If and when price gets down there. Got an alert there. Now I prefer the buy, so I probably won't. I don't know. God, it looks so nice though. Just looks so nice. Look at all that volume. All right. Yeah. Looking back at that oil trade. All right, let's get us our M. And we might take a look at that one as well. Thanks, Michael, for giving me that idea. Get off of me, you gnat. Got a mosquito in here. Or a gnat or something. What else have I got? So pound Aussie dollar is a 4, so not quite bullish, but pretty close. Go take a look at that. Where you at? There you are. All right. So longer term uptrend. 1 hour. Yeah, I was kind of keeping an eye on this little area either. It's a little high on the curve, so probably ain't gonna. Probably, yeah. I decided to ignore that one. Even if I don't trade as though, I still sometimes, Tony, like to keep an eye on them because I'm always learning.
Yeah, I
I'm
know.
just,
I definitely just set alerts. Like I have this trading view just full of alerts all the time popping up.
yeah, well, especially for me now because I just upgraded my trading view package the other day, so
Hmm.
I got a lot of alerts
Oh,
now.
did you? What did you end up going to?
The it would have been the one. Two, well, I think I just what did I do? The second package, I think it was. It was the one that came with 100 alerts and
Oh,
like where I
okay.
could do 4 boxes like this.
Yep.
Yeah, because prior I just
Nice.
had where you could do just the 2. So I did this to add in the 4, but off stream I still have to spend some time playing around with it because I need to get it looking
Oh,
better
for
and
sure.
all that stuff.
Yep. I hear you.
But it
Yeah.
was. But I tell you what, it's pretty helpful for, like for example, this morning I was watching gold and I was also watching euro pound for a potential short sell on
Hmm.
both of them.
Yeah.
So it was
Yep.
just nice, looking at the 1 minute here, the 5 minute here, the what I have, the 15 minute, and then the 30 minute, just so I could see what those, because I was looking for a supply zone sell, and I was just watching what the candles looked like on those time frames, because it's easy to get caught up on a 1 minute time frame or a 5 minute
Yeah, I
time
know.
frame.
Yep.
Oh my God,
Yep.
look at that gigantic spike. But then you look at it in the context of the 15, the 30, it's like, it's not that big of a deal. So I was kind of utilizing it that way, and it kept me safe out of both of those trades, actually, just because, whereas in the past, I'd have been, I'd have probably looked at the 1 or the 5 and jumped into that trade. I was keeping an eye on the 15 and the 30 at the exact same time, and it was keeping me safe. So yeah, that was 2 trades I didn't take that would have definitely failed, all because I was just looking at a few different time frames for that specific price. So yeah, it's pretty good. Pretty good stuff.
Oh man, I know. It always is tough to try to read the tea leaves. Essentially, you know.
Yeah.
Looks like everyone in the chat is sounding off of their positions. Looks like we got some people in gold, Nasdaq, WTI crude, Nasdaq longs.
Well,
A lot of Nasdaq longs.
NASDAQ longs,
Tony,
eh?
give us an NQ trade. Give us an NQ trade, really? Yeah, well, I don't know. I'm looking at the chart, but it's just like tough to get these overnight levels.
Yeah. Yeah. No, that's true.
We'll see.
NQ.
Yeah, it's tough trading in NQ, guys, overnight. Everyone just says long. And do a giveaway. Everyone, do a giveaway. I don't know if we're
Yeah.
gonna have a giveaway tonight, guys.
Yeah. I don't think so. Because didn't you guys give away one in your session? 50K? Or was it 25?
We gave away
25?
25K. Yeah,
Yeah.
it's
Yeah.
usually at 25Ks.
Mm-hmm.
People like those. I mean, as long as you got to keep it tight, though. You got to keep it tight. You just got to grind out those wins. Keep the losses tight, especially with that. I think it's 3% max drawdown on pretty much
Mm-hmm.
any account. But yeah, always look at the next max drawdown. I saw somebody in the chat saying that I look like a soccer player. I do not play soccer. I did when I was younger. I do not play it now. Got to be careful. Got to be careful as you're getting older. Not that I'm old. I'm 29.
Yeah.
But
29.
it is
I'll
what it
trade
is.
you. I'll trade. I'll be.
Actually, we were talking about that earlier. We were talking about that earlier today in the futures takeoff session. How I get ID'd all the time, all the time. I can't go in and even to a place in the middle of nowhere that like there's no police around. Like, come on, like no one's gonna say anything, and they're like, give me your ID. So
Yeah.
when I was younger, I always like wanted to be older, and I still like envision myself as wanting to be older. But of course, right when I get older, I'm going to want to be younger. So two
Yeah,
sides
that's
of every
funny.
coin.
Yeah. Well, so back in my mid 30s, I'll be 43 next week. So in my mid 30s, I was always clean shaven, and I drove a lot of medical transportation back then. So I would always
Oh
get
wow, yeah.
asked how old I was. So
Mhm.
keep in mind, I'm mid 30s, and they would always ask, how old are you? How old are you? Usually the older ladies, right? They'd be asking me.
Yeah, of
And
course. Yeah, yeah, yeah.
I would always say, well, just guess, just take a guess. And I did that on many dozens of people that would ask me, men too at times, but they would on average, yeah, I know, they would on average say
Yeah, yeah,
23 to
yeah.
27, like
Yeah,
23 to 20, mid
yeah,
30s. I'm
yeah,
like,
yeah.
maybe I should grow a beard so I can actually look my age.
Yeah, 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 yeah.
So
That's usually the cop out, right? Like just grow a
that was
beard
when
and yeah.
yeah, but that was when I started growing it out. Yeah, getting a lot of people talking about NQ and this and that. Here's kind of your economic map right here. So again, you got your COT report score, your retail positioning. So again, that's a more of a contrarian signal. Seasonality trend, gross domestic product. You got both the manufacturing and the services sector for the PMI data, the Purchasing Managers Index. You got your retail sales, you got your consumer price index, and we look at the year over year number for a lot of these. The personal producer price index, the personal consumption
CPI, yeah.
expenditure, which just so everybody in the chat knows, this is what the Fed likes the most for whatever reason,
Mhm.
right?
Mhm.
The PCE. And then you also got your employment numbers, employment change, how many people went back to work, unemployment rate, what's the percentage of people unemployed, and then the interest rate decision. So this is
Mhm.
essentially what I'm looking at. So again, if the big banks and institutions increase their longs like they did on the Nikkei and the Nasdaq, then that gets a positive score. If they maybe added a tiny percent or subtracted a tiny percent, it's more of a neutral number. I'm only caring about the significant changes. So obviously the S&P 500, they significantly significantly decreased longs. And I think they even added a few shorts as well. So it's all on a percentage
Yeah.
basis. And then the FTSE, not really much of a change, but the retail traders are net short on all of these except for the DAX. They're net long. DAX in Germany. So they're net short,
Mhm.
right?
Mhm.
You got price going up, but yet everybody's piling on trying to stop the rocket from getting to the moon, right? Kind of the way it is. Opposite of catching a falling knife. So, but
Yes, yeah.
seasonality, it's a good month typically. Historically, does that mean every single month is going to be a bullish move for these? No, not necessarily. But we're just looking back. I think 10 years is the way our algorithm looks at it. Obviously, the trend has been up on everything. Nasdaq's kind of fooling around a little bit of late, but the GDP report's good. But then you get into the PMI data, and this is where some of them are faltering. It's just been negative for a lot of these items. For the U.S. data, for the Nikkei as well, the FTSE. So for the manufacturing and the services number, retail sales numbers haven't been the greatest for a few of these, but yeah, good inflation numbers. We have seen a steady, nothing great, nothing huge, but a very very slow, very steady decline in inflation. I mean,
Yeah. Yeah.
that's just kind of the reality of it. So this is where a lot of the argument falls with people saying he needs to cut rates. He needs to cut rates, right? So that's why a lot of people are saying that. You got an argument either way, I think, right? And obviously we'll know more
Yeah.
after he flaps his lips on Friday at the Jackson Hole. But that is one of the big reasons right there that everybody's pushing for. But yeah, then you got your producer price index, PCE. That's all negative. Same thing with the employment change numbers. So that's it. When you all
Mhm.
add all that together, again, anything that's 5 or higher is a bullish signal. You got just the Nikkei, and you got all the U.S. and DAX and FTSE indices kind of in the neutral camp. They're more bullish than they are bearish, but they're not bullish enough to be jumping into big positions, and hence why it's kind of going sideways the last few days. I mean, I
Yeah.
don't think it
Yeah.
was as bad the last couple of days, but Monday it was, right? wasn't Monday just like
Oh
straight
yeah.
sideways? Yeah.
Yeah.
So this,
Monday was a little bit of a crazy day.
yeah, yeah, that's what I heard.
Chop City. Yeah.
Well, it was, yeah. I mean, it was the same thing in currency land too. I mean, yeah, just it's been mainly gold and silver is all I've been paying attention to this week. I mean,
Mm-hmm.
again,
Yeah.
I don't have but one bullish item that's a 5 or higher, and that's just the euro dollar. But even it's kind of sketch. And then the dollar Swiss, the dollar Japanese yen. I mean, it's just there. I just yeah, yeah. I'm just right there
Tough
on hold
trading.
with everybody.
Yep.
uh,
Yep. I know. It's tough to just like because there is a specific date that everything's coming out and a date and time. So it's just you got to just sit and wait. It'd kind of be it wouldn't be the right plan, honestly, to kind of make your own bias going into this thing. Oh, I think that everything's going up.
yeah,
And
exactly.
then
They don't
you
pay
get some
us to
sort of
think.
terrible. Yeah, I know. You just got to react. You got to take the market for its face value, right? Price is king. It's all about the
Yeah,
price action. So, yeah, you just wait, see, identify new levels, and try to play it safe until then, because I know a lot of people probably just get chopped up and start trading and position themselves before some major news event and blow their
hmm,
account, and it's like what's it all for, man? Come on. So yeah, I mean, if you're good, I mean, I'll just kind of go through some of the
oh
Nasdaq
yeah,
stuff that I was looking at over the day. So yeah, back end, anytime you want to
yeah.
switch over to my screen, that'd be fine. And we'll also see if we can't pull a trade out of the hat, right?
That's right. Pull a rabbit out
So
of a hat.
yeah, no sleep narrator says opposite of catching a falling knife is what? Throwing a spoon? Maybe, right?
Yeah,
Whatever's
insert
easiest.
your own words.
I
It
know,
may,
honestly.
yeah, I'd
Yeah, it's
love to
tough.
throw all kinds of trade ideas at y'all, but it's just tough right now. And we say that a lot. Like NFP had us freaking out there for a little bit. Some of this other data we had last week, like it's. I don't know about you, Tony, but just stepping back from a 30,000 foot view, it seems like just the
Yeah,
trading has been a lot tighter over the last few months versus
yeah,
the prior administration. I mean, I don't know how else to say it. It's just been, I don't
yeah,
know,
yep.
it's just been a lot edgier. But I think
Yeah, I
overall,
know. It's definitely like that for sure.
no, I think it's good though. I think it's good that we all experience it because I know I'm learning a lot. I know I'm learning a lot
Oh
about
yeah, for
patience,
sure.
you know, and even stricter risk management. Like I said, especially on not holding trades open on the weekends. So
Yeah, yeah.
getting rid of some of the bad habits that maybe I just kind of let slide because it seemed like it was a little easier to.
No, I know, and that's one of the things that happens is that right as the market changes, the market dynamics change, market sentiment obviously changes all the time. But yeah, the dynamics of the market are for sure changing under the Trump administration. I know a lot of guys in the algorithmic trading community, and they literally had to like rewrite their algos to account
Yeah,
for essentially this like market environment that we're in, and it's totally different now. Both
yeah,
good and bad. Good for the country,
yeah,
but
yeah,
obviously market needs to digest it.
yeah.
But yeah, so kind of just a couple of things that I'm looking at, Chad. I know like a lot of you guys seem to want to be long the Nasdaq right now. Maybe it's on the short term, maybe it's on the long term. I don't know. We'll see if this analysis can't, like I said, pull a trade out of the hat. But yeah, today, oh my gosh, it was just like crazy. No headlines, no economic data really. Or was there? Hang on, let me look. See, with my strategy, no, there wasn't any. I mean, there was 10:30 a.m. Obviously, EIA crude oil import
Mhm.
numbers or storage stockpiles. But yeah, no economic data today, right? So 8:30 comes and goes, and literally just right at the market open. There's a 2-minute chart that we're looking at here. 9:30 a.m. just dumps, dumps, dumps. So for anyone that watches the futures takeoff session, I'm usually on with a couple of the other coaches, Coach Sam, Daryl, Troy, Paul, and we all rotate a little bit. But it was just dump city. Like I don't even know what else to call it. Off
Yeah.
of like nothing. I don't know. Maybe it was like the anticipation that the FOMC minutes were coming out or something, or how the Jackson Hole Symposium is
Mhm.
supposedly just talking about the fate of the American economy. I don't know, but it just kept on going down. And for people that watch me, like I said, I usually do the 15-minute opening range, and that was identified here on the chart. Basically, just these two white lines: opening range high, opening range low, and you're looking for a break, to either to the downside or to the upside of that opening range. And then I do, standard deviation moves from that opening range. I mean, we went 1, 2, 3, 4, 5 standard deviation moves to the downside, which is like
Wow.
it's pretty big. I mean, six is like major. Like, yo, there is something going on here.
Yeah.
So five standard deviation move, like with no real headlines to drive the price action. It's just like,
Yeah.
wow, what is going on? And then of course, right, like how Coach Tiger likes to say, or a lot of the coaches, when in doubt, like look left. And it's like we were just like, at what point are we gonna just stop, and like find a low? And I guess we found it, going back to August 5th, just some arbitrary level. Like, I don't know, maybe you can put a Fibonacci level someplace here and you could have called the bottom. I'm not looking that far back, but yeah, it was getting pretty hairy out there today. So that's kind of it. I mean, really what I'm doing when I'm trading in these things, I'm looking for candle confirmation below these levels that we are continuously getting a push through the level. And then I just do like momentum trade, get short, ride it down. My trades were, I don't want to say few and far between, but like, I only had to do a couple of trades, obviously, a couple of trades on the right side of things, and you're in the money, multiple thousands, depending on how many contracts you want to be taking. And then even so, as we were making new lows on the day, the buyers would try to step in, but they were just totally getting absorbed, resistance, shoot back down, blowing right through the next standard deviation level, continue to the downside. So it's like, it was kind of hard to not make money. And for anyone that was watching the futures take off, like, we had a really good day. I think we all were up multiple thousands in the green. So it was a really good day for everybody on the desk, which was a huge positive because we want to see everybody here succeed and share ideas. Obviously when we're doing this like 1 minute, 2 minute, 5 minute trading on like this intraday time frame, and we have some guys that are literally looking at like the 30-second chart, and they're like doing like scalps, and they're only in a trade for like 20 seconds, and it's like, wow, okay, so
Is his
we
name
definitely we
Sam?
definitely just have to. Yeah, I'm not. No, no, no. I can't name drop anybody here. Like, come
Oh,
on.
okay.
You just gotta take a look. You gotta take a look. Tune
Yeah.
into the futures takeoff session, and yeah, just another housekeeping note for everyone that's watching. Generally, when we do the futures takeoff session, the Forex fire session, those are really the times to tune in if you're looking for a giveaway, and just be active in the chat. I don't really know, we usually like to get a good litmus test of who's watching, and pick some good winners here. So for anyone that's looking for a trade, I mean, I always like to look on the shorter term time frame, 2 minute chart. I'm looking the 9 MA, 21 MA. 21 is the purple line here, 9 is the green. Yeah, for anyone that's long, I think that you guys were talking about long somewhere over here about 15 minutes ago, 20 minutes ago. And yeah, we're kind of just grinding, right? It's just a slow grind to the upside. Maybe it continues overnight. We are currently just in no man's land, diddling in the middle, as Coach
Yeah.
Tiger likes to put it. Um, so for me, like right now, I wouldn't take a trade. Generally, I don't trade in the evening session, the Hong Kong session. Um, so, but I mean, for anyone that is long and looking to stay long for like the next, I don't know, half hour to an hour, one of the things that I look at, as long as it stays, you don't get some candles that are closing below this 21 period MA, I mean, you should continue to grind to the upside. But that's just a couple of the things that I look at on the shorter term basis. Because it is the evening session, you do get obviously a huge liquidity drag. I mean, you can barely see the volume down here all the way at the bottom of the chart compared to obviously all the stuff that happened today. But even so, some of the volume drifts off after 12 noon. You get that midday or lunchtime lull that everyone likes to talk about. But that's kind of what we're looking for. So yeah, no giveaways tonight. Kerf, no giveaways tonight. Let's see. If price respects the resistance at the NQ 4-hour order block, I'm going to look for a short position. 22,720. 22,720. Oh, that's far away. Oh, he's probably looking at the CFD or something. Yep. So yeah, guys, no giveaway tonight. Sorry about that. Tune in for Forex Fire or the futures takeoff for sure. Get you a 25K account there. So yeah, I mean, chat, looks like we're getting a little bit of a pullback in that NQ. If this candle closes below that 21 period MA, then we might get a little bit of a pullback more to that 23,330 level. So if anyone's looking to scalp a little bit of a short in this evening session, be my guest. 1 second to close on this chart. On this candle. But yeah, I mean, that's kind of just what we do, bob and weave. And then as we continue to go lower, we might see that 9, the shorter MA, start to lead the longer MA. And that would give us more confirmation that, we were getting a little bit of a pullback. Because it's so hard to see volume, especially when you're trying to trade the NQ at 10:30 at night Eastern time. So, yeah, you just got to take it with a grain of salt and definitely be careful.
How do you feel about the Nikkei futures for the Asian session? Any thoughts on that?
Yeah, I've actually never looked at the Nikkei. I've never had to trade the Asian session. Let me see.
Yeah.
NKD, is that the one that you guys look at?
Yeah, that's what Paul was, because I was asking him this question last night or the night before, and NKD would be the one. I believe NKD.
Why is it so illiquid? I mean, like, it looks super illiquid.
That's kind of.
Or maybe I'm looking at the wrong. Wrong contract. No.
Maybe
NKD. Yeah, it's NKD. Is there one that you can look at that's better?
Well, we got E-mini. So ENY is E-mini Nikkei. Let me look here. So Nikkei, so regular, so in Nikkei USD futures is NKD. Nikkei JPY futures is NIY. Look at this one. Oh yeah, that's ugly. So that one definitely ain't any good. Mini. So we got micro and we got E-mini. The E-mini chart looks horrendous, like gaps everywhere. Maybe this MNI one exclamation point. That looks a little better. MNI one exclamation.
I got micro NASDAQ for MN. Are you looking on TradingView itself?
Yeah, TradingView.
Oh no, I'm looking at I'm looking through the execution, the Project X platform. So.
Oh, I get you.
Yeah, the only one that we got is the NKD here.
Oh, okay.
It looks a little bit gappy and like illiquid, but I'm sure if I brought it up in a different platform, it'd be okay. But let's see.
Anyway.
No, I'm not seeing much. It's just got these downward moves like all day, man. I was looking right after the results from the FOMC came out. I guess September, is it a September rate cut? The Fed watch went from 93% down to 82%, which I thought was like a
Yeah.
little bit ridiculous. Like, really? So we're just like not going
Yeah.
to be cutting at all, huh?
Yeah, I know. It's just like, are you for real? Because it was at 90. Well, first it was at 90 for a day, or for at least a little while. It was at 99%, 98, 99. But yeah, then it went to
Yeah, yeah.
95 to 92, and then right now is down.
Mm-hmm.
Yesterday was 85 because I looked yesterday, and today is down to 81.9.
Yeah.
So it just keeps going down. If it keeps at that rate, we'll be at 50-50 in no time.
Yeah, I know, honestly. I'll be waiting for that level for sure.
Yeah, and then even, I mean, assuming they do cut it, then October 29th, I mean, at the moment, it's 46.4% chance of staying the same, only 45.5% of dropping another 25.
Yeah.
So that's that. And then December is 46. Yeah, pretty similar numbers to drop another, or no, to stay the same actually. So who the hell knows? It seems like
only the Federal Reserve chairman knows, right?
I don't even think he knows. I think he's trying to decide if he wants to listen to the numbers or defy everybody. I don't know.
Yeah, I know. I think that he's literally just trying to, play out the last couple of months in his tenure. Like he must just be so done with the whole Federal Reserve gig, and probably just wants to go retire or do some research, economic research, and some talks, make a boatload of money, and just get out. Right, get out of the political spotlight too.
Yeah, can't say I blame him.
Yeah, no, I know. I hear you. Yeah. So, I mean, chat, for anyone that was, again, looking at that NQ trade, just, again, on a shorter term time frame, like we're not, planning on holding for the next 2 hours or anything, or just making a trade and then going to bed. Definitely not doing that. But like I say, the 21 and the 9 is two things that I look at here. And it looks like, we're getting a little bit of, I guess, of a bearish pullback, but I mean, all night, it's just like you can get these random green candles that just come in and spike, whether it's institutions just positioning themselves for tomorrow or, taking some risk off, putting some risk on. That's one of the reasons why I don't, again, trade like NQ in the evening time, because it's just weird trading sometimes.
Yeah. No, I could agree. I'm going to go back and watch part of you guys' stream today. I want to see you guys commentate on that.
Honestly, you should just skip through. Just skip through, and you'll see the P&Ls grow and subtract and contract. It's insane.
That'll make for
today
some
was
good shorts.
Yeah, niche crazy. Yeah, definitely tune in tomorrow. Definitely for the Forex fire and the futures takeoff. We'll get you paid.
There you go.
Everybody makes money during those sessions. Come on.
Yeah, and I'm excited about ours too. Like I said, we don't normally have, but we got some PMI data during our Forex fire, so it's going to be fun. Can't wait for that. The bulk of these reports come out after our stream ends. It seems like we've had a lot of 7:30 a.m. Reports come out lately. It's like, come on, just do it just a little bit earlier.
I know.
And we got our wish.
30 minutes.
we got our wish. So
that's
it's
good.
still great. It's pretty good. We go through all the currency pairs and the indices, gold, silver. I go through Bitcoin as well. That's the one.
Perfect.
That's the one crypto that my software kind of watches as far as all the fundamental data and everything. So it's good stuff. And then Coach Richard, he's really big into market geometry, what he calls market geometry. So he likes to use the pitchforks and throw them out there, a couple different types of pitchforks on some of the higher time frames, and get confluences there where prices intersect. So it's pretty interesting to see. Pretty interesting stuff. But then, you got Coach Michael with his Traders Dynamic Index, where he's pretty much built an algorithm out of the Bollinger Bands, and he's got a what has he got? He's got a market baseline. He's got a couple moving averages in there. He essentially wants his TDI to replicate what price is doing on the price candles themselves. Just kind of as confirmation, a lot of
Yeah.
confirmation, but it's as mechanical as
Yeah.
it gets. And he should make an algorithm, I mean, a bot out of it, but he's tried finding somebody. He can't find the right person to figure out how to do it.
Where is it?
But
What does he have it on TradingView?
I believe so. Yeah.
Oh man,
Yep. I believe so.
put him in
Well,
contact with
he's
me. I
got a
can do
Pine
it.
Street. Oh, okay. Well, shoot, I'll let him know
Yeah.
in the morning.
Yep. 100%. Done that numerous times before. I got my own. That run on TradingView. They actually
Okay.
have one algorithm right now that really good hit rate. It's like 72%. It's probably one of the best algorithms that I've had over the past couple of years. But trade silver.
Yeah.
It actually only trades from 12 noon Eastern time to actually 11 p.m. Eastern time. So it's going to close out its position in about 15 minutes here. And
Yeah.
actually, I was looking at it earlier before. I mean, if you look at my chart here, I'll take a look.
Mhm.
Silver, I ended up getting an alert because obviously it just dings, that you got into a trade. I think it took a short right here, 96 cents, just like mean reversion type trade, a little bit of a spike. And, now we're
Mhm.
up 5 cents a contract, so $250 per contract. Not terrible. And we'll just hope that it holds. Hope that it holds down here. Make a couple of bucks.
Yeah.
But that's kind of what it does. It just obviously makes decisions fully automated. Like don't have to look at it ever. But I still get these
Mhm.
little alerts from TradingView every once in a while saying that you're in a trade. And it's like cool.
Yeah. Well, I mean, it
72% win
sounds
rate.
like nice.
Yeah,
Nice. It
gotta love
sounds
it.
like he's spent quite a bit of money with this a friend of his trying to get it done, or maybe it's not a friend
Really.
anymore, but
Yeah.
a
Oh
lot of
God.
money,
Yeah.
and they've been trying to build it and build the algorithm, but they just can't seem to
Yeah.
get it right. Something
You
about they
kidding
can't
me?
get it right. So I don't know what that means. But no, I'm definitely
Because
gonna
what I
hit
found,
you up.
I mean, I did a Python boot camp. When was this? Oh my God, it's like 2.5 years ago. So I did a Python coding boot camp, and that's how I really started getting into writing algorithms. And like PineScript is one of the easiest
Yeah.
scripting, like script languages to like write in that I found. Almost to a point where I'm just like, I just don't even do it anymore. Because it's just like I don't want to say too easy, but whatever. It is what it is.
Yeah.
Yeah, definitely. Tell him to hit me on the Slack.
Yeah. Oh, for
Slack
sure.
chat.
No, I personally, I don't know how all that stuff works either, the Python or any of that.
Oh yeah,
I did a little bit of study on the Pine script just because it was on
sure.
TradingView, and
Yep, yep.
I kind of played around with it and figured out how you could use AI to kind of write you some Pine script codes for,
Oh yeah,
you
yeah.
know,
So you could
this
do
and
it for the
that.
supply and demand zones, dude.
Well, I tried, yeah, but I don't know how to word it. Yeah, I'll have to figure it out, but
I could send you
yeah,
a
I
script.
don't know.
I'll send you a script. I got my old supply and demand zone script that I use, that I
Well,
used.
oh, okay, okay. Well, now I do have an order block. Somebody created a Pine script tool. That's actually what I use on TradingView. It's actually
Yeah,
pretty accurate. I just had it shut off earlier when I was doing my analysis,
yeah,
but
yeah.
it's great because I mean I've obviously been plotting my own zones manually for 10 years, 10 plus years. It is nice to just flip a button and have it on there for you,
Literally,
just
it's
to get that
perfect.
split second quicker of a look at a zone versus having to search for it with your eyes.
No, I hear you. I hear you. They do help. They do help. Take a little bit off
Yeah,
the old eyeballs and let you
yeah,
focus on what the heck the market's actually doing here. You know,
yep, yep.
Unreal.
That was true.
So I mean, hey, we
Uh,
got 12 minutes, 10 minutes left. It looks like. What do you usually do in the last 10 minutes? Read through the Daily Mail.
yeah, just kind of look back over the calendar. I mean, for sure, we
Yeah,
got
yeah.
like I said, PMI data early in the morning. We get off of here at
Uh-huh.
10, so 10 o'clock my time. So
Yeah, yeah.
I'll be hanging out for about another hour 15 minutes. Then I'll lay down for like 2 hours since there's nothing else to do. Then I'll wake
Literally,
back up
right?
at 2 a.m. and get ready for my news piece. Do it all over again.
Absolutely. It's just the
But
grind.
yeah,
It's the grind of a trader, the
yeah,
life of a trader.
Yeah, we just don't have as much material today. Like I said, I've literally just got those 6 actionable items, and that was it. So
No, I
they're all
know, but
kind
it's
of
just
oil.
it's just one of those things where it's like, it's almost like we're waiting for the FOMC meeting or the CPI data or something. It's
Yeah.
like everyone just like sitting on their hands. Monday, Tuesday was a little bit different, right? But as we get closer and
Mhm.
closer, it's like, okay, we see a little bit of less volume. Some people are just sitting on the sidelines for that initial just spike in one direction or the other. Something that you gotta watch out for. So definitely be
Yeah.
careful there for anyone that's trading during news events. Um, and like a lot of prop firms actually don't allow it, right? Like they don't allow you to have a position, hold a position through a news event. Like 1 minute before, you can't put one on, and then you can't trade until at least 1 minute after the digestion of that news coming out. So I think that's a pretty good rule, especially for the earlier, more novice traders. And even so, for some of the more elite traders that I know, like these guys don't even, guys and girls, don't even
Mhm.
like have positions on, during these data dump times. What do you think?
Yeah. Not the same. No, I'm exactly the
Yeah,
same. I
yeah.
tend to
It's just,
stay
it's
on.
just such a crapshoot.
Mhm. Yeah, I mean, the only way possible is if I'm in, if I'm in 80, 90, 100 pips on something that's very, very much, fundamentally in my favor. But even at that, I do it. And when I do it, I'm sweating it, I mean, because it could very easily
Yeah,
wipe all my gains away. But I don't usually do it.
yeah.
No, not often at all. But yeah, yeah, nothing. I mean, USD. So let's see here, Wednesday. Yeah, unemployment claims, flash PMI data tomorrow morning.
Yep.
That's it for the dollar. Before Fed Chair Powell flaps his lips at Jackson Hole on Friday. That's basically it. I could pull up a copy, screenshot of the economic heat map. We could take a quick look at that
Yeah, sure.
before
Why not?
we skedaddle back in, if you don't mind. Let's pull up my goodies. I'll just go
There
up
you
here to
go.
the
All yours.
dollar. Zdixe. Yeah, let's just, yeah, see, there's my order block tool I was talking about. It's just a simple MTF supply and demand order block. It's kind of nice to have that on there. But anyway,
I know it always helps.
just, yeah, it does. It's kind of nice. So where are we at with the dollar? Well, these reports that you see in yellow over here, these dates, that's within the last 7 days. So of late, for the US dollar, we've had a bearish report on retail sales. We've had, so that's one bearish, but we've also had 2 bullish reports. So bullish for the
Mm-hmm.
PPI and then bullish for the jobless claims. So obviously, when it comes to inflation data, what's bullish for the dollar is going to be bearish for the stock market, and vice versa, right? Just
Mm-hmm.
CPI bearish for the dollar, bullish for the currency. I'm sorry, bullish for the stocks. So you look at all that economic data, you add it up, you put it on a little speedometer, it's about 50%. So that basically means 50% have met, I'm sorry, 50% of these have beaten expectations. The other
Mm-hmm.
50% have missed expectations. So that's one of the things I like to look at. And I've got this same map with with the other 7 major currencies too, by the way. So it's just nice to see, overall, are we having vibrant, our economies over, are they exceeding expectations or not? Sorry, having a brain frizzle there.
Sure.
But
No,
yeah,
totally.
so I like to see that. And let me just copy and paste this one over here as well. Just a nice, another little thing I like to look at is the 8 majors. So what's that percentage look like for all the other ones, right? So obviously the dollar, 50%. When you're looking at global economic surprise score, just like it says, it reflects the average economic outperformance or underperformance across the major pairs. Higher score indicates a more robust global economic outlook. So just going by that, what's the strongest currency we have? Well, it's the British pound. Now, this isn't necessarily what's went up the most. It's just what's been beating expectations. So where are the economists being the most wrong? Right? That's kind of the way I see
Yeah.
that, because it's obviously stronger. So, yeah, the British pound It's just been a stronger one. Well, why is that? Why is the British pound stronger? Well, I don't know. Let's take a look at the heat map. Let me copy that over. Let's take a quick peek at that. Get all kinds of stuff on here. Strongest one right here. So, yeah, you've had bearish readings on the retail sales and manufacturing, but everything else has been bullish. Other than unemployment, that was neutral. Well, The Economist, look at it this way, ladies and gentlemen. The Economist got one of these reports correct. So that's why I joke. That's why I joke and say economists are like meteorologists. All right,
It's true.
They get paid to throw their forecasts out. They're quite often right. They're quite often wrong, but they always get paid and come back and do it again the next time.
100%.
And that's why I don't care. That's why I don't care about watching anybody on MSNBC or CNBC or whether it's Fox or CNN. It really doesn't matter what side, left or right. They quite often are wrong. So just give me the hard data. I just want to see the hard data and make my buying and selling decisions based off of that. So, but yeah, that's perfect example of why I don't pay attention to anything they say, anything that's in the news, blah, blah, blah. Now I still pay attention to it because I like to see what the average retail trader is thinking, what they're going to do.
100%. Yeah.
Where they're going to add liquidity into the system for the banks to then go and chew on, go and manipulate, right?
Yeah, I know. I mean, how much of the market is like retail traders now? What, like 30% of the market? Is it that big?
Oh gosh, probably. I mean, I don't know. I feel like I've heard some numbers recently. What did I hear? I don't know. It was something like that, but yeah, and it's even less in the currency world, right? I mean, it's all about
for sure.
The interbank system definitely is way higher than that. Even what is it? Are we up to like 9 trillion, or what is the size of the Forex market now? Is it 9 trillion? DeepSeek.
Tell me.
How much money is changed hands in the Forex daily? It's some ridiculous number. But basically, whatever this number is, guys and gals in the chat, trumps all the other markets combined. So you take the stock market, the futures market, the commodities, everything, you add it all together, the currency market is still way bigger. So it says here, as of 2022, 7.5 trillion per day. But yeah, that was 3 years ago, right? So I'm pretty sure I heard.
So yeah, it's probably like 9.
Yeah, I think. Well, I feel like I heard 9 trillion sometime in the recent past. But DeepSeek and I think even ChatGPT, for whatever reason they're still stuck in 2022.
Yeah, I know. They just don't want you to get that good data, the up to date data. They want you to pay for it or something.
Is that what it is? Okay.
Oh yeah, 100%.
That's what.
Yeah, I'm actually looking right now. I say how much of the market is retail traders, and it's like it used to be 10%, and now apparently it's grown to 25 to 35% of the market retail side. So yeah, retail is very important.
Wow, I didn't realize it had grown like that. That's crazy.
Yeah. Well, if we all band together, then I mean, maybe we can push the market. Maybe, just maybe.
Have some more GameStop type moves.
Oh yeah, 100%. Let's do it. Let's get it up in the. We'll get it running in the future side though.
Yeah. All right. Well, I'm looking into starting to learn the futures. Me and Paul said we made a deal to teach each other. I'll teach him Forex. He teaches me futures.
100%. That's awesome, dude. That's awesome.
In as a group. Have you ever traded Forex?
I did. Yeah, I did, but I couldn't really understand the like the leverage. And I'm talking about trading a cash account, right? Like 1 to 500, like leverage is that like accurate? Is that really what brokers are like issuing people? Like that's insane. But I mean, you need to have the leverage in order to trade, right?
Yeah, but not that much. Yeah.
Oh, okay.
Yeah,
All right. Well, I mean,
there's some
I don't.
yeah, there's some pretty sketchy ones out there. I don't know. I mean, we
Yeah,
got all
yeah,
the
I
leverage
know.
we need right here. You start getting that kind of leverage, and then yeah. The last thing you want to do is go
Yeah, I agree.
bankrupt and have to owe your broker.
I
But
know, but isn't
yeah, it's
that
usually
usually what happens? Is they just extend it all
yeah,
the way, and then you lose money. So it's one of those things. But yeah, I mean, we'll get it. We'll definitely get into it a little bit more. I'm interested in taking a second look at like the forex side. But dude, I think that's all the time
Mhm.
we have.
Yeah. That's it, man. No, I appreciate it. Guys and gals, I'll be back at it in 5 hours, Forex Fire. And then about 10 or
Wonderful.
so hours, you
Get
can
some
catch
rest.
Coach Tony. So we'll get
Yes,
some
sir.
rest and yeah, join us. And we'll probably have some more giveaways tomorrow, I think. I'm not 100% sure, but definitely tune in
For sure.
and we'll see what we can do for you. So, Coach
No,
Tony, appreciate
100%.
it.
Let's get it. Coach
All right,
Tiger,
brother. You have a good one.
pleasure as always.
Absolutely. Have a good one.
Bye.
Hola Prime, trade with transparency.